Happy New Month, everyone, and welcome to another edition of our weekend market analysis series. I hope you're all doing great and ready to dive into what's shaping up in the gold market as we prepare for the new trading week. Gold continues to be the asset to watch, and last week was no exception. We saw price hit an all-time record high at the $2,817 level for the first time, a move fueled by market jitters following US President's confirmation of a 25% tariff imposition on Canada and Mexico, two of the largest US trading partners. That announcement actually sent shockwave through the market, reinforcing concerns about trade tensions and inflation, both of which have been key drivers of the gold's bullish momentum in the last 1 year. Now, with inflation worries lingering and market sentiment turning risk averse, especially after the latest soft US GDP figures, there is a lot to unpack going into the new week. Will buyers continue to push price higher, or are we in for a correction that sellers could take advantage of? Stick around as we dive into the structural details on the chart and analyze key price levels that could shape gold's next move. Before we proceed, I would like to mention that this presentation is purely for educational purposes and does not constitute financial advice. Always consult a professional financial advisor before making any investment decisions. With that said, let's jump right into the chart and uncover what opportunities the gold market might present for us this week. Now, before we get into the nitty-gritties on the chart of how market participants have digested the fundamentals, let's check out the economic calendar to see what data points and events the market will be focusing on in the coming week. And as you all know, since we are monitoring the gold commodity, we shall be focusing on high impactful event from the United States economic docket. Now, the first impactful event for this week is coming in on Monday, February 3rd, and we are looking at the ISM manufacturing PMI, a data, or let me say, an economic indicator that measures the health of the manufacturing sector in the United States. Then on Wednesday, February 5th, we have the ADP employment change, a monthly economic report that provides the number of new jobs added in the United States private sector on a monthly basis. Then on that same day, we will be looking at the ISM Services PMI, a report that measures the performance and expectations of the service sector in the United States. Now, finally, on Friday, February 7th, we are looking at the two labor oriented data, of course. We have the average hourly earnings that measures the change in pay for workers in the United States, and it's also considered to be a key indicator of inflation. So, if wages are rising quickly, it could lead to higher inflation, prompting the Federal Reserve to raise interest rates, which often strengthens the US dollar. Then finally on Friday is the most important event for the week, and that is the non-farm payroll report. And for those of you who do not know, this report here shows how many jobs were added or lost in the US economy in the last 30 days, and this of course exclude the farming sector. So there you have it. These are the high impactful event we're looking forward to. And of course, as we all know, the anticipation of this event has its own way of influencing how market sentiment will be. And this will reflect on the chart as price action. So talking about price action, let's scale into the chart on the 4 hours time frame, which is going to be my first point of reference for this week's analysis. And of course, right here on the 4 hours time frame, what I did was to take into account the character of price action in the last 6 to 7 weeks. That's from the last week of December of last year. And if we do this appropriately, you will see here that the market has been bullish. Now, I have a trend line here which has played a significant role during this time frame. And here you have it. Here you can see how initially it was serving as a resistant line, and not until the second week of the month of January we saw price break above that trend line. And since price broke above the structure, look at what happened. Price had continued to respect it, which further emphasized the strength of the buyers at this point in time. And you know how we use our trend lines. When we have an ascending trend line, we obviously want to be looking out for patterns and structures that support buying ideas. So for me, the uptrend still remains very intact. However, we want to decipher what path is going to take. As price going to retrace back into the trend line before it continues the uptrend, or will the uptrend happen immediately by breaking out of the record high at the 2008-17 ish? Now, to help us navigate the structure, let's zoom into the last, I think, 2 weeks thereabouts. I have a key level which I will be using to as a yardstick to guide my trading decisions for this week, and that is the $2,780 level. And of course, you will see this level here had played a significant role in the last 2 weeks. It was initially a selling niche during the second half of last month, and then we saw how price broke out of the structure last week, signaling the buying potential in this market. Now, from a technical standpoint, whenever price action breaks out of a key structure like this, theoretically, we expect that price at some point may come back, retest the structure to continue the uptrend scenario, or even come into the trend line to incite that uptrend move. So what I'm going to be looking at next week is to see how the market is going to play out around this $2,800 zone. So of course you can see we had a little bit of consolidation around the 2,800 before it broke out to hit that record high. So I want to see what will happen during the first 8 to 10 hours of the week to determine if we are going to be buying from here, or wait for price to come into structure, the 2,780 or the trend line, to incite that uptrend scenario. And if it so happens that buy pressure persists above the 2,800, it could be a platform that will help us continue the uptrend move. But trust me, I will be with you in the comment section of this video at the beginning of the week after monitoring the character of price action around that $2,800 area to inform us of what our next line of action will be. So there you have it, my in-depth analysis on the gold commodity for the new week. So please stay tuned in for the updates. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. And if you haven't yet, consider subscribing for more insights, weekend market preps, and of course, market updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.